Isn't it amazing how just a little accounting rule change can make all the difference in the world in a corporation with how good they look, how profitable they are, how much assets they are versus their debt? I mean, you can make a failing piece of garbage, steaming pile of dog do look like a nice bowl of your favorite chocolate pudding, if you will, just by an accounting rule change. Nothing changed but the rule and little descriptors of what this means and what that means and what you can say or do this way, but you can't do that way. Let's change that. Now all of a sudden, you look fantastic. Market up, your stock rallies. Fourth quarter earnings, fantastic. Oh, and I'm talking about Facebook. Zero hedge. How Facebook beat 2016 earnings on a $1 billion tax benefit from a simple accounting change. Again, nothing happened. They didn't earn more money, some extra money they found under the mattress. Well, we paid too many taxes last year. No. Nothing changed except an accounting gimmick. And when I always tell you about cooking the books, it's not just the banks, it's not just the financial institutions, it's the big corporations too. They all cook the books, except this book cooking came essentially from the authorities. Yeah, you can change. We're going to change the rule for you guys now. So it's an official cookbooking session that's not really illegal. Makes the company look great. Fourth quarter earnings, fantastic. Yesterday evening, we noted that Facebook's stock soared in after-hours trading after the company announced in-line revenue results for fourth quarter 2016, but blew away street EPS estimates of $1.34 versus actual EPS of $1.44. But, like with most tech company earnings, a slightly deeper dive into the results reveals that a conveniently timed accounting change created $214 million of extra net income in the fourth quarter and drove about 73% of the earnings beat for the quarter. Keyword, conveniently timed accounting change. We're about to release the numbers. Can we get this accounting change first? Yes, great. Accounting change is in effect. Now we'll release our numbers. Our markets rally, especially Facebook stock rally. On an annual basis, the earnings farce is even more drastic. For the full year of 2016, the tax accounting changes added $934 million in net income to Facebook's P&L, or roughly 32 cents a share. So what changed? Well, it turns out that the Financial Accounting Standards Board suddenly figures that tech companies should be allowed to run the excess tax benefits derived from stock option exercises through their P&L. And here's how it works per the Wall Street Journal, says Zero Hedge. The Financial Accounting Standards Board, which sets U.S. accounting rules, approved the change in an attempt to simplify companies' accounting for employee stock payments. The accounting is changing in several different ways, but most of the effect on earnings has to do with the tax benefits that companies get when their employees exercise the stock options they've been granted. That is a compensation cost to the company, and it is tax deductible. When options are exercised, it is typically after the company's stock price has risen, making them more valuable. And so the company recognizes excess tax benefits, the deductions over and above those it expected to realize when the options were first granted. Under the old rules, those excess tax benefits go into the company's shareholder equity, but under the FASB change, they will be recognized on the income statement immediately, and that reduces the company's provision for taxes, boosting net income. As an added bonus, the FASB change also boosts Facebook's operating cash flow because the excess tax benefits are now classified as cash flow. from operations instead of from financing. Even though total cash flow is not impacted at all, we're sure this is positive news in some way. Just so we're all on the same page, here's how the process works. 1. An employee is issued stock options. 2. Stock soars, because what else would a tech stock do? 3. Employee feels stock is fully valued and exercises their options. 4. Bubbly stock price creates excess tax benefits upon options exercise and drives earnings beat. Number 5, earnings beat drives stocks even higher, or the stock even higher. And finally, 6, the process is repeated quarterly in perpetuity. So in summary, bubbly stock price necessarily equals even bubblier stock price. For those who missed it, here's our summary of Facebook earnings from yesterday. So much for worries about tech companies rolling over. After today's AAPL beat, Apple, whatever, which nonetheless resulted in one of the biggest intraday jumps in the stock in history, sending its highest ever 6%, over 6% today. Moments ago, Facebook reported results which crushed expectations and have sent the company higher as much as 3%. The street was expecting $8.18 billion in revenue and EPS of $1.34. Instead, it got revenue of $8.81 billion and a 51% increase from 2015, 84% of which came from mobile, and EPS of $1.44, or a 78% increase. It achieved this with daily average users of 1.23 billion. So it said, let me back up on that one. It achieved this with daily average users of 1.23 billion, which is above the 1.21 billion expected, up 18% year over year, while monthly active users soared to 1.86 billion, also above the 1.84 billion expected, and up 17% from a year ago. This means that, as of this moment, more than a quarter of the world's population logs in to Facebook at least once a month. Putting Facebook's results and unprecedented user growth in context, in 1 year, Facebook added some 269 million monthly active users, roughly all of Twitter's user base, in just the past year. And here are the details reported by Facebook. Daily active users, or DAUs, were 1.23 billion on average for December 2016, which was an increase of 18% year over year. Mobile daily active users were 1.15 billion on average for December 2016, an increase of 23% year over year. Monthly active users were 1.86 billion as of December, an increase of 17% year over year. And mobile monthly active users, or MAUs as they like to call them, were 1.74 billion as of December 31st, 2016, an increase of 21% year over year. Finally, the biggest sector was mobile monthly users, which soared 1.74 billion as of December, an increase of 21% year over year. Also, if there was any concern about ad revenue slowing, that too can be ignored for now, because mobile advertising revenue represented approximately 84% of advertising revenue for the second quarter of 2016, up from approximately 80% quarter 4 2015. So where does that leave us? It says the stock predictably is soaring into all-time high territory, up almost 3% in the after-hour session to new records. Markets rally, markets rally, markets rally. How is it that an accounting change? That's the equivalent of everyone understanding, look, 5 plus 5 is 10. Okay? But you really need 5 plus 5 to equal 12. And you've got some friends in high places. And you got to go to this accounting department in the government and ask for a little change. Can we change this? Can we make 5 plus 5 equal 12 today? Or in a week? Because our numbers are about to come out. And man, it would be fantastic. And since I'm coming here to ask you for this, you guys know you can go buy our stock. It's going to soar in a minute or a few days. So if you approve this, insider trading. We don't have to discuss it. You guys go buy some Facebook shares. You know you're going to make some money on it. Matter of fact, when you do so, make sure you're leveraged because they're not coming down. They're going to be going up. So make sure you leverage the hell out of that bet. Let us go with this accounting change rule. All will be happy. So like I said, it's not just the banks. It's not just these giant financial institutions. It's big corporation, big club corporation. And where was old Zuckerberg at when all this crap was happening with the fighting back and forth from Clinton and Trump before the election actually happened? Remember, he was over in Germany. You know, she was very upset that people were exposing the Muslims coming in from Syria, the refugees, raping women and all the crap they were doing. And people were posting it on Facebook. And she was sitting next to him, a little open mic session where we need to work on, blocking some of the stuff on Facebook. And he was like, yeah, okay, yeah, you work on that. Since when does the head of a social media network meet with essentially the leaders, the top leaders of a country? In this case, Merkel. That's like the president, the prime minister or chancellor. It's like the president. When you have so much potential control over what people see and hear, that's when. So I'm doing you club members a favor. We're blocking stuff. Pizzagate, we're blocking that. Anything you want to talk about, we block it for my club members. So, by the way, club members, Q4 2016 is coming up. Need to throw me a bone. I did it for you. My turn. Need some accounting rule changes. Got some stock options I want to take care of. Well, you got it. You hooked us up. One hand washes the other. We'll take care of you, buddy. Is that really what happened? Cannot say for sure. Is it highly likely? I think so, if I'm to give my opinion. Change the accounting rules and all of a sudden you're great. You could have a failing company. Literally, you could have a failing company, insolvent, accounting change, cooking the books. We look fantastic on paper. Stock market, our stocks rally. Ooh. I bet MF Global's shares were rallying right before they went bankrupt the next day. Anywho, take care.